Good day guys. Welcome to another tutorial on Forex trading. My name is Forex trading mentor and instructor, and on today's tutorial I'm going to be teaching you how to identify price manipulation, or should I put it in a much better way, bank manipulation. So in this tutorial I'm going to be teaching you how to actually spot when smart money is entering the market and when they're actually manipulating the price, and when you should be entering after the price manipulation, so you can be able to ride that financial or that profit wave down or up depending on the direction that smart money will be trading in. So without wasting any further, without wasting any of your time rather, let's jump on to that tutorial. Okay, cool. Now the first thing we need to look at when we're trying to identify bank manipulation or where price is about to create the most liquidity, we need to be looking at the crucial areas of structures. I'm not going to be going through over that. That's just market cycle, and we included it in our course. So if you want to learn more about the Forex market, just click on the link below and basically sign up for a course, and you'll basically learn everything you need to know. But today we're going to be focusing on a much narrow area of completing a profitable strategy. So this is a crucial area of structure here. This is one spot 5,000. It's a psychological level. It's just a random line that we created on the chart just to make this example come across in a more clearer way to you guys. So what we're looking for here, we're looking for price to come in this area and basically show signs, that price or orders are being actually placed in this area. So let's assume that price is coming in from below here and it's going into this level here. And what happens is we look at three candlesticks here, because this setup is basically called a three candle formation. So we're looking at three candles that we're going to be using to trade, to take advantage of the manipulation that's going to be taking place created by the institutions. So what's going to happen is price is going to come into this level. This is what you need to look for. The first candle needs to come into this area, this crucial area of resistance here. Price needs to come in here, come in full force as if it's going to break through. And then the next thing we need to be looking at now is we need to be looking at price to be rejected back down here. Understand? So once price comes into this level, it needs to be rejected back down below here and then close. Now after price has closed here, we are looking, or let's say after this candlestick has closed, we are looking at the second candlestick. Now what are we looking for at the second candlestick? We're looking for price action or the next candlestick to actually close 2/3 below the first candle that was rejected. You understand? So if this candlestick closes 2/3 below, then we can actually consider this as a confirming candlestick that price is now about to move in an opposite direction, or to move in a downwards direction, or to move bearishly, because this setup here is actually a bearish setup that I'm making an example on. You understand? Now the question is, do I enter after this candle is closed? Here's the thing, it gets a bit tricky depending on the type of risk management strategy you're using. But in my case, I would wait for this candlestick to close and for this candlestick to actually move back up. The reason why I'll do that is because I want to reduce my stop loss, my risk that I want to put in this trade. But some people would like to enter after this candlestick has closed, but I believe that a 20 pip stop for me is enough. So I would actually look for those 20, 15 pip stops. So I'll wait for this candlestick to actually move, maybe move in this area. Maybe I would enter in this zone here, or I'll enter here, placing my stop loss just above this candlestick here. You understand? So the stop run candlestick will be my measurement to actually place my stop loss. But we won't be going much into detail into that as well. But you just need to know that you need your stop just above the stop run candle. If you want to hear more about that, you can basically click below, like I said before. Just check out the course there. Now, the there are certain rules that we need to follow, or manipulation that actually follows. Now with manipulation needs, if price is going to be, if smart money actually is going to be entering this trade, price is actually going to move up, you understand, and orders are going to be placed and price is going to be pushed back down. So that means that smart money is actually in this trade and is about to move price into the opposite direction. Now the other concept is, if smart money is not going to be trading in this position, what's going to happen here is price is going to close above, then open the next candle and continue in an opposite direction. So it's going to close above, then close above again, you understand? So that's what's going to happen when smart money or price manipulation is not in play. Those are the concept and the basic rules of manipulation or of price action when manipulation is about to take place. Now let's look at another example here. Here we have a different example. Now in this case, we're looking at the first candle which comes in here and closes above. Now you must be confused and say, but you said if price is not going to rally in the opposite direction, it's supposed to come back to close below. This is exactly what's happening here. Price went up and closed above, and excuse me, the next thing that happened here is price closed above on this first candle. Now the second candlestick actually went down and closed below, you understand? So this indicates that smart money is in because it's actually pushing price back below these areas of significance. Remember, this type of entry is actually valid in areas of significance, and price needs to push up, then be pushed back down below these areas. So once this happened, once the second candlestick is actually pushed below, what do you think you need to do next? You need to wait for your entry. Again, it all depends on you how you're actually going to be entering in this position. You can wait for price to actually push back above here and enter, or basically enter whenever you want to enter. But the fact remains is that your stop needs to be above the stop run candle. So which was the stop run candle? It was the first candle which pushed up and triggered out the stops that were being placed before. And then this was the confirming candlestick that went down and closed below. Now, this concept of trading is not based on candlestick patterns. I would advise you not to focus on candlestick patterns when you are trading this setup, because institutions tend to manipulate candlesticks and make you enter into premature trades, and that's why most traders get triggered out most of the time, because they're following these candlestick patterns and not following the concept behind these candlestick patterns. So the one thing you need to do is to follow the concept. Now the three candle confirmation rule is actually the concept that actually lies behind candlestick patterns, and it's actually better than candlestick patterns, because it doesn't matter if your desired formation is not formed, but if the principle is being followed, it means that the entry is now valid, meaning that if the candlestick breaks and then breaks below and then comes back and closes below the structure, you understand? So that simply means that the principle is being followed. So I'm going to show you another example that's quite a bit different from this one. Now in this case, you can see here I didn't count this first candle. Okay, so what happened here is price moves into this area here, this area of significance, then closes above. Now the next candlestick that opens, it actually opens and closes also. It also closes above this line here. But notice something about this candlestick. This candlestick does not close below this candle here. It also does not close above. It closes just in between. So it means that price is not actually sure what it's about to do. And it's basically, we call it an indecision candlestick. So price is basically undecisive at this point. We're not sure if price is going to move in an upwards direction. We're not sure if price is going to be moving in a downwards direction. So what are we supposed to do in this case? We wait for the next candlestick to open. So when the next candlestick opens, what we expect is that candlestick to actually push the price back below this area of significance here. If not, this candlestick must just shoot above and continue moving in an upwards direction, meaning that this entry is no longer valid as a sell. We should now be looking for buy entries. So that's the concept. Second candle closes below in this case because we are looking for a bearish setup, and that setup is actually formed. This candle confirmed that this price is now about to move in a downward direction. So what do we do in this case? We basically wait for the next candlestick to open and find the perfect entry on this candlestick. Now you must always remember this confirming candlestick must always close 2/3 below this candle here. Let me go back to the first example and show you something here. Now, if you're looking at this candle here, this candle closed 2/3 below. Now, another thing that could have happened here is that this candlestick could have went down, then price would have pushed it back up and closed maybe just above this 2-year. Maybe it would have closed just above in this area here. It would basically look like this candle, but in an opposite direction. You understand? That would be another scenario that could happen. Now, in that type of situation, we do not take that trade. We just leave it like that because now we are seeing signs that price is now fighting each other. It means that there are a lot of sellers that are pushing price down and they're forming this pattern here, and there are also more sellers that are pushing price up. So this basically means that price is most likely to consolidate or range in this area, and it might very much catch us out. So just leave that out and wait for the next confirmation. So back to our example here. So in this case, this is a 3 candle confirmation. Our price moved down, closed. This one closed maybe over 2/3 of this candle. But the actual fact is that price ended up closing back into structure below this resistance line here, making our entry a valid entry. And then we look, this was not our entry, this was our confirmation. I really apologize for that. This is confirming that this entry is now about to be valid. So we look at the third candle. So it's either you enter after the close or the open of this third candle, or you wait for the candle to actually push back up to reduce your entry or your stop level, your stop loss level, and you enter your trade either in this area or just below here, or you can basically enter it here. But the deeper you go or the lower you go, the more your stop loss increases, because we need to be placing our stop loss just above these stop run candles up here, because we know that price is going to have basically difficult time having to climb back up and trigger us out in this area. So what happens after this thing happens? Price is most likely to move rapidly, because with smart money, when smart money starts to manipulate price, it means they are preparing to take a big move. And if we're able to catch these moves in time, we can actually ride along with smart money and basically profit as they profit. You understand? So yeah, I'm going to be jumping onto the chart and basically making a live example for you, because I understand that if someone is learning something, they also need to see it in action, because there's a difference between listening to me talk about something and there's a difference between watching me actually implementing that in process. So that's actually what I like to do for my students, basically explain it for them, so that if they did not understand, because I know that sometimes I might end up eating my words and you might not understand what I'm saying, and then it's going to be better now if I go onto the live chart and basically do a graphical representation of what I've actually been talking about. So I'm going to be doing that now. I'm going to be jumping onto the chart and basically showing you exactly what is going on. So let's do that, guys. Okay, cool. Let's mark off an area as our area of significance right here, so that we can actually show you this in live situations. Okay, we took our horizontal line and we can see that price has been reacting in this area for quite some time. Let's just make it more accurate. Exactly. As you can see, price has been rejecting this area for quite some time. As you can see, it's supported here and it also rejected here, and now it's heading back into the same area. So now we're looking for confirming entry, our 3-candle confirming entry. So now we know the rules of that. So we need to wait for the first candlestick to actually break inside that level of significant and then be rejected back above. So in this case, this is a bullish example. The first example I made for you was a bearish example. So now you're going to see a live representation on an actual bullish chart. So let's do this. Let's play this. And as you can see, price moved inside this zone here and it closed above but showed an indecision candle right there. It did not move up. It did not move. It did not move down. It did not move up. Instead, it just closed in between. It's not sure where it's going. So that's an indecision candlestick. So now we're waiting for the third candlestick to actually confirm the direction of this price movement. So as you can see, the direction chose to shoot back up and closed above this area, meaning that now our entry is valid as a buy. So what do? We enter in a long position. Let's see right here. We enter a long position with our stop loss just below the rallying candle. I like to place it just above there. And because we know that once we are trading price manipulation or bank manipulation, we know that institutions, they don't just manipulate price for fun. They manipulate price and they actually move it a minimum of 40 pips upwards. You understand? So we're actually going to find a significant level where we can actually take our profit. So as you can see, that's our level. We can actually increase it if we want to, but we're playing it safe and we're putting it right above there. So this is our entry. It looks good. It looks valid. Now let's see what will happen as price action progresses. So price is now shooting in an upwards direction. And it looks like it's breaking out of the flag and it's continuing, and just there we can see that our take profit had been triggered. You understand? So this is the power of confirming entries. We know that with institutions, they buy price low and they sell high. In this instance, this was a flag. As you can see, price has been rejecting or has been supporting in these areas here and has been rejected. This is a form of a channel, but if you're more experienced, you'll identify a flag. And we actually were able to find the perfect entry of this flag. We were able to find it way below. We're entering exactly when the institutions were entering, and we actually took the full movement of this entire setup. So if I was to play this again, you'd actually see that this thing is actually looking like it's still going to continue moving up, but I'm not sure. But either way, that's just going to take up the length of our video. Either way, we can see the concept in action. Like, I want to show you here, if you're looking at this double top here, it also happened in the same area. Like I told you, smart money likes to enter likes to buy low and sell high. Look, I'm going to make another example here. If you're looking at this area here, let's see, right here, let's see that. You see there, right there. Look, do you see this? Do you see what happened? Price pushed down into this zone here. Let's move this below here. This is just something I just spotted now, guys. So I thought I should show you the power of this entire concept. So if you okay, cool, right here. Now, if you're looking at this, price actually pushed down into this significant area of structure, and then it pushed back up again. And as you can see, what happened after that, price moved in an upwards direction. This is just a typical example of historical events that price can actually move rapidly when you are entering the same time as institutions. So this is it, guys. This is basically the most important or the most powerful strategy in the Forex market, powerful entry strategy in the Forex market. So if you're already having a strategy that you're trading with that's based on on all these patterns that form on the chart, you can basically take this and implement it as your entry, and you'll identify a significant improvement in your current strategy. If your strategy has been triggering stop losses and all of those funny things, use this type of entry and you'll find a significant improvement. If you had a problem with placing huge stop losses, this type of entry strategy will actually reduce your stop loss into very tight stop losses, and it would also reduce the chances of you being stopped out of any trade. I mean, spikes in this thing happens when news events are being released, and if you're a smart retail or sorry, not retail trader, if you're a smart technical analysis trader, you would know not to trade during news events, because that's when the spikes tend to shoot up and all of those stuff. So if you're trading like this, your trading is going to be taken in a different level. Now, I also use the same entry method, but I implement it with other strategies that I actually compiled and created a course out of this, but you can check that out. I already told you that before, so you can basically check that out and basically take your trading to a different level. Okay, cool guys, that's it for today's tutorial. I hope that lesson gave you much value, and I hope you will take that strategy and basically implement it in your current strategy. If you do not have any trading strategy or any trading knowledge, that's cool. You can just click on the link below. You'll be redirected to our online course. Just purchase the course and go through the lessons, and everything will be clear to you. And then you can go back to this video, take the strategy, implement it in those strategies that we're actually providing in that course, and you'll become a profitable Forex trader. So that's it from me today. Have a great day. Goodbye, guys.